All right. Welcome to Coffee with Marcus and Mark, the number one stock market show on Spotify and one of the most popular market updates on YouTube. In this show, we talk about what's happening in the markets and how we're trading them. Today is Friday, June 30th. It's the last trading day of the quarter, and stocks are ending with a bang. The Fed's favorite inflation gauge is out. Apple makes a record. Nike reports earnings. And next week is a holiday. What to expect? Plus, our short Oxy calls are in the money. So, what should we do? As you can see, there's a lot to talk about. So, let's go ahead and get started. If this is your first time here, my name is Mark Hodge, and I'm head coach at Rockwell Trading. I'm running the show by myself today, but on most days I'm joined by Rockwell Trading's founder, Marcus Heitkotter. Now, even though I'm running the show solo today and for the next week, I promise that you're in good hands. You could say we have a ton of trading experience, we know our stuff, and we're not afraid to tell it like it is. So if you're looking for some honest insight into the world of trading, then you've come to the right place. Now, before we dive in and show you our trades and how we're tackling these crazy markets, let's take a look at what's moving the markets today. Let me go ahead and bring up the S&P 500 here. The S&P 500. Look at this. Today up 1%, gapping higher, getting back up towards those highs that we had in June. Just an incredible move here. I have a 50-day moving average up. We see that the S&P again just pulling away from that 50-day moving average, and right now looks like we could, if we finish where we're at right now, finish at highs that we haven't seen since April. So an impressive day for the S&P. The Dow up 0.6%, also participating in this rally, and the Nasdaq up 1.4%. So a pretty decent move across the board for the indices. It's the last day of the week, the last day of the month, the last trading day of the quarter, and things are looking pretty good. The S&P is up 7.9%, looking for its for its third straight gain quarter-wise. The Nasdaq is on pace for a 12% quarterly gain with back-to-back positive quarters. The Dow's up 3.3%, on pace for its third winning quarter as well. So just an impressive quarter, an impressive start to the year. S&P, as we could see here, look at this. Let's first look at the S&P. There we go. Year to date, the S&P is up 15.3%. The Dow up 3.6%. So not in line with the S&P, and definitely not in line with the Nasdaq. The Nasdaq year to date, 30.5%. Just a huge start to the year for the Nasdaq. Mentioned yesterday that this is the best first half for the Nasdaq since 1983. So, hey, right now, stocks loving or resilient to what's going on with inflation. And we're seeing a nice move higher across the board, although the Dow is definitely lagging. As we know, that tech's been hot, and a lot of that fueled by the AI frenzy. Now, let's take a look at Apple, because Apple, big part of this movement here in the S&P and also the Nasdaq. Look at Apple go up 1.6% today. What makes this memorable is that Apple is now trading with a market capitalization that is greater than $3 trillion. So the first company to do so out of the gate, opening higher, continuing to rally. So this is a new record high for Apple, and right now trading with a $3 trillion market cap, just huge. Now, let's take a look at the economic calendar here, because today was an important day for the calendar. We had core PCE price index being reported. This was a biggie for the week. We see here that it came in up 0.3%, so an increase of 0.3%. Now, this was to be expected, but it's a tick lower than what we experienced in actually April. So this is May's number, and this is a positive thing because it does show that inflation is on a trajectory lower. So the core personal consumption expenditures price index is often viewed as the Fed's favorite inflation gauge. And this is showing that, hey, that this is moving lower. In fact, the 4.6% year over year number is a tick lower than the 4.7% that was expected. So traders, taking this as a positive. Uh, One thing to consider here, or why this number is significant, actually, I saw that St. Louis Fed President Jim Bullard, he pointed out three reasons behind why the Federal Open Market Committee, or the FOMC, favors PCE over the CPI number, Consumer Price Index. His three reasons were: PCE accounts for substitutions that people make as they substitute some goods and services for others. The second reason is the PCE has more comprehensive coverage of goods and services. And the third reason is that historical PCE data can be revised. So, for those three reasons, we often hear that this is the Fed's preferred inflation measure. And hey, he laid it out there. Three reasons why he and the Fed prefers this over CPI. It doesn't mean that CPI isn't important, but this is definitely one to keep an eye on. And today, it was positive, not negative. We could go ahead and look at Fed funds futures. We see didn't really affect things here. A quarter point hike is priced in for the July meeting right now. 86.8% probability that the Fed will raise a quarter point. And this future probability chart remains the same. Traders betting that the Fed will raise another quarter point and it will stay there until the March meeting, where now members, or traders, that is, are betting on a quarter point decrease at that point, and then continuing to decrease interest rates and to cut rates there in 2024. So we'll have to see if that remains true. But with core PCE coming in basically in line with expectation, but a tick lower year over year, that is positive. Now, we could take a look at PowerX Optimizer and just look at the heat map here, look at what's going on overall in the markets. And we see that this is a broad-based rally, just pretty much green across the board. You have the Magnificent Seven: Microsoft, Apple, Nvidia, Google, Meta, Amazon, Tesla. Maybe that's no, that's seven. And you see that these are all up nicely. Tons of green. There are a couple of laggards here, Nike being one of them. Let's talk about Nike here. So let's go back, bring up TradingView. NKE is the ticker. We talked about earnings yesterday using the PowerX earnings analysis tool. Well, what to expect? And I said that overall, historically, looking at the last 3 years, last 12 quarters, Nike has a tendency to beat on earnings expectations, but the follow through, or what happens there, is just mixed. It's a toss up, sometimes higher, sometimes lower, no real trend. Well, interesting to see that this time Nike missed earnings expectations. The estimate was 0.677 a share, and they reported 0.66. So missing expectations. Revenue did come in line with expectations. They were down about 3% pre-market, now down 2.4%. So a little bit of a drop here. This was the first time in 3 years that they missed expectations because of lower margins. So the reasoning behind the lower margins, Nike said, was because of higher product input costs, elevated freight and logistics costs, and an uptick in promotions and unfavorable currency exchange rate. So maybe that's just a temporary thing. Like I said, it was the first time in 3 years they actually missed expectations. We saw that looking at the earnings analysis tool, but an earnings miss there, and right now trading lower. And in a sea of green, interesting to see that, hey, well, Nike's one of just a handful of S&P 500 stocks that are down today. Now let's do this. Let's jump over to PowerX Optimizer. I guess we're here right now looking at the heat map. Let's talk about some open positions, because it is expiration Friday. And Marcus and I both have some options expiring. Let's first look at CSIQ. So last week, Marcus and I sold the 35 put on CSIQ. And right now, CSIQ is trading at 37.59. So unless there's this huge reversal out of the blue and CSIQ closes below 35, which doesn't seem likely at this point, those puts will expire worthless. We keep the credit. We got paid to potentially own shares at 35, and we can look for new opportunities. So looks like CSIQ is going to be expiring worthless. Now, if I look at PNC, we'll take a look at PNC and then go to Oxy. PNC was up a little bit today, pulling back a little bit, seeing a positive reaction to the bank stress tests, finishing the day higher yesterday by 1.7%, but just kind of trading in this upper range here. Again, I'm looking for PNC to get back above 130, 131, 132-ish, so I could start selling calls again. Right now in the position down a little bit, my cost basis is 136 and my break even is 134.55. So down a little bit on this one, but sitting tight and looking to see this one rally, get through these levels and be able to sell calls again. Now, taking a look at Oxy. Oxy was a position that we were assigned last week. We became the proud owners of Oxy shares at $57 a share. We sold calls. The 57 strike was my preference at the time. On Monday, we opened up at on Monday, we opened up at 56.15. So with Oxy starting to rally on Monday, I decided to sell the 57 strike, which is right at my cost basis, right at my assignment price, to get the most premium possible. Now, during the week, Oxy just rallied. We had, I guess it was 4 out of 5 days positive. Right now, up more, up 1.3%, and we're trading at 59.28. So what does this mean? Well, let's take a look at the earnings calculator here, and let's take a look at call premium for next week, actually. So July 7th, if I look at call premium here for the 57 call, it looks like we're 238 by 246. So that means that maybe we could get $2.42 for next week's 57 call. But we also need to consider what we'd have to buy back the calls that we've sold for. And right now, $2.23 by 230. Maybe we have to buy these back for 227. So if we have to buy those back for 227, and then next week we can get a credit of 239, maybe. Now there isn't a whole lot of meat on this bone. We could say maybe 12 cents as a credit. That would be a 9% annualized return. That's not enough for me to get excited. So with just such a small credit, I don't need to be married to this stock and try to force the issue, try to stay with it just to hope that I can roll and get a small credit and continue on. I'm going to let these shares get called away. And who knows, maybe in a week or two, we pull back again and we're trading back at a level where I could sell the 57 put again. Maybe a month from now we're assigned, or maybe a week from now we're assigned shares again and we start the process over. So for me, I'm going to let these get called away. That makes sense based on my plan, and we can continue the whole wheel process. The wheel process beginning by selling puts like we did with CSIQ. If we get assigned like we did with Oxy, then we sell calls. And then if our calls expire in the money, if it doesn't make sense to roll or we don't want to roll, we let that call expire and those shares are called away and we get to do it over and over again. So that's the goal with the wheel. Right now, looking like Oxy shares are going to get called away and looking for new opportunities next week. Now, next week is going to be a little unique. Let's go ahead and bring up our holiday calendar because we have Independence Day on Tuesday, July 4th, the 4th of July holiday. Markets are closed. So U.S. markets are closed. Nothing to do then. But Monday, July 3rd, we actually have an early market close at 1 p.m. Eastern time. So the beginning of the week, I don't expect any real volatility. You never know. Like sometimes you get just this move out of the blue on light volume. But typically speaking, 4th of July week is a very low volatile week with little volatility, not a whole lot of volume, because big traders tend to take the holidays off. And the 4th of July holiday is one of those perfect holidays to spend a little more time doing other things, traveling, going to the Hamptons, going to Bodega Bay maybe, or just enjoying the pool and barbecuing. So this is going to be a slow week for me. I am not going to be doing a stock market update on Monday. So enjoy the extended weekend. Markets are closed, so no update on Tuesday. And then on Wednesday, we'll be back here with Coffee with Mark, maybe Marcus. But again, Marcus is still traveling with his daughter, enjoying a trip before she leaves the nest and goes away to college. So that's what next week looks like. Don't expect a whole lot. Personally, you never know. You never know. But I will be more active Thursday, maybe Friday. Wednesday, we'll see what happens when we come back. But typically speaking, the 4th of July holiday week is very slow. Not a lot going on. But I'll be back here on Wednesday. With that said, enjoy the extended weekend. And hey, happy trading, everybody.